PricewaterhouseCoopers surveyed 115 insurance companies on their Solvency II implementation projects. Japan Post Insurance and AXA lead as the world's largest insurers according to AMBest ranking. John Heaney from Hiscox shares a few words with us on the past year and on the new year ahead. Hello and welcome to this new edition of News Insurances Weekly. Nearly 3/4 of insurance companies believe they will be ready for the Solvency II implementation deadline. More than 40% of the surveyed are either in the preparatory stages or have yet to launch their projects. Many insurers are unsure of the actual budget they will need to complete this process. 40% of these companies have less than €1 million for the budget, while 9% estimate they will need more than $20 million. As detailed rules will be issued in the next 2 years, insurance companies may find themselves struggling with budgets and needed staff to complete the implementing measures. AMBest published its annual rankings based on 2009 financial results, listing the world's 25 largest insurance companies. 2 rankings are available, one in assets and the other in net written premiums. French insurance company AXA is the largest insurer in net written premiums. Japan Post Insurance is the largest in assets with $1.1 trillion. China Life and Life Insurance Corporation of India are 2 companies from emerging markets present in the net written premiums list. This ranking is subject to modification due to competition and eventual restructuring among companies. John Heaney, head of Professions and Specialty Commercial at Hiscox, exposes 2010 and shares with us some thoughts on what to expect for 2011. Let's listen to John Heaney.
I think what I would say 2010 has been a fairly stable year for us in the professions and the commercial division. We have seen quite a lot of activity towards the end of the recession. A lot of sort of claims coming in on the valuation side, and a lot of claims coming in from solicitors' professional indemnity. So on the professional indemnity side, some quite big issues. I'd expect those to sort of disappear by the end of this year, and I think we've seen the back of that now. So next year, I think we would look for the market to start to harden on its rates. We would really anticipate that a number of insurers will start to feel the backlash of some of those types of claims we've talked about coming in next year. So we think rates would have to harden. And then the main thing that's going to drive that, I would suggest, would be sort of on the professional indemnity side, probably more people being sued for larger sums, and also perhaps some type of catastrophe, the kind of floods and other kind of bad weather-related incidents happening. So, whilst we don't want anything bad to happen, I rather suspect that this could be the driver towards rates going up next year.
Thank you very much for your attention, and I'll see you for next week's edition. Goodbye.